top three things from Keith's Macro Notebook. Number one, India, up 0.9% day over day to 26.2% year to date. We obviously continue to like India as one of our favorite places to be in both international equities and Asian equities. Certainly have liked that for about 9 months now, and we continue to see long-term sort of upside as the structural GIP fundamentals, and that stands for growth, inflation, and policy in India, continue to improve with policy being the sort of leading indicator for that. Flipping over to number two, European equities. The DAX is up 1.3 and 1.4% this morning on admittedly no volume. They're trying to, essentially what they're doing is bouncing these things in some of these sort of more dovish headlines in the recent days. But both the DAX, the Italy's MIB index, the CAC 40 in France and Portugal all remain bearish trend on Key's quantitative scorecard. So, we definitely be fading this rally here. You're getting some great short selling opportunities in European equities, and we still like the EZU ETF on the short side. And then number three, oil. Down 1.3 day over day after a 2% down week. You definitely get a consumption tax cut on the margin, but if anything, we would argue that Treasury rates, hitting sort of new year-to-date lows last week down in 2.34 range, are definitely not forecasting that that's a big enough tax cut for consumption on the margin. And so that's something you want to keep an eye on to the extent that inflation is no longer working. You definitely don't have as many places to put money to work, and obviously the net result of that is raising cash,